So let's prepare our balance sheet. So we've got our profit there. Now we're going to prepare a balance sheet. So first things first, we need a heading, balance sheet for fishy business. Now as at, was it the 30th of the 6th? And we're going to put our current assets in first. Now cash is my favourite current asset, so I'm going to put it at the top of the list. Where's my cash? Cash at bank. So I've got 7,500 as my cash at bank. I'll tick that one off, and then I'm going to go back to the top of my list. I've got accounts receivable of 20,000. Next current asset I've got was cash at bank already. Fishing supplies. I'll just call it supplies. 1,500. Expenses. That's it. I've only got 3 current assets. So let's add that up. That's 27,500, 28,000, 29,000. So I'll have 29,000 there. And then I'm going to have some non-current assets. Now my non-current assets are going to be my motor vehicles, my fishing boat and my Goodwill, but I've got this accumulated depreciation to include. So let's do my motor vehicle first. My motor vehicle is 32,000, is 42,500, less my accumulated depreciation of 12,200. That's less, so that gives me 30,300. And then I've got my fishing boats. My fishing boats, which come in at 95,000. Less my accumulated depreciation of 29,550. So let's have a look here. What have we got? 29, that's 30,000, so that's 65,450. 65,450. And what's next is my Goodwill. Goodwill, which was there, $5,000. So that's, is there any other current? I've got those two, so tick, tick. And non-current, I've got that one, non-current, I've got that one. So that's all right. So let's all add those up. 30,300, that's 70,450, 100,750. 100,750 plus 29,000 will give me 129,750. So that's my total assets. Next I'll have current liabilities. Current liabilities. Let's start at the top of my list. I've got accounts payable. $14,000. Next current liability is my loan, Ocean Bank. $8,000. Do we have any others? We've got staff wages payable. My wages payable is $650. Now I can tick that one off. Now, did I miss any? Current liability, current liability, current liability. So I've got 3. So I've got 22,650. 22,650, cool. Non-current liabilities. So my non-current liabilities will be my loan from Riverbank, 25,000. And I don't think we have any more. So my loan from Riverbank, which is this, that's cool, 25,000. So therefore, what does that make? 47,650. So that's total liabilities. So my total liabilities. Next thing we're going to be looking for is what we call net assets. So my net assets is just my total assets minus my total liabilities. So my total assets minus my total liabilities is 129,750 less 47,650 equals 82,100. The last bit we've got to do is equity. So my equity section comes down to 3 things. Equity is my capital. Now we've got our capital here, but we don't know how much it is. So I'm just going to leave that for a moment. What's my next thing is drawings. Less drawings. My drawings is 5,000. Now that's a 5,000 decrease. And the other thing I want to add in is my profit, which we calculated in the income statement. Now my profit was $14,600. So I put in $14,600. And all that needs to balance back to my net assets, which is $82,100. So calculating, I get 82,100 minus 14,600 plus 5,000 equals 72,500. And that then ticks off my balance sheet. Now we've got a couple of additional questions in there. We've got a question that says, explain the difference between staff wages expense and staff wages payable. Okay, wages expense is incurred during the period. Wages payable is incurred but not paid. And that's C. And the last thing that we've got is the balance sheet provides some useful insights into the financing and investing activities of the business. Comment on the financing decisions of the business. Now the financing decisions come down to D, let's call that. Financing decisions is where is the money come from to buy the assets. Now we've obviously got equity of 82,000, so these are the pieces of information that I'll be interested in. 82,000 in equity, 47,000 in liabilities, and that's purchased 129,750 of assets. So if I want to work out the financing of the business, what I've got is I'm going to do my total liabilities divided by total assets, which equals my total liabilities of 47,650 over 129,750. If I do that calculation, 47,650 divided by 129750 equals 37%. So that must mean when I do the other side of the equation, which is total equity over total assets, which is 82,100 divided by 129,750, that must give me 63%. And if you give me that as an answer, I will then know that you understand the financing of the business. So there is my income statement, and I'm not going to fit it all on the one page, and my balance sheet.